In this video, we'll look at buying a home versus buying an investment property. Should your first home be an investment property? Is it better to rent and buy an investment property? And more. That's starting right now.
Welcome to Home Buyers School, brought to you by Brookfield Residential.
Hi everyone, I'm Carl. Welcome to another Home Buyer School video, a channel where you get the latest strategy, tactics, and tips from home buying experts. And remember, if this is your first time on this channel and you want to get the latest strategies from the experts, hit the subscription button below, hit the little notification bell so you don't miss anything. So today I'm joined by Kevin French, realtor with Remax Realty, and the question we're going to answer is buying your first home versus an investment property. So Kevin, I guess my first question is, does an investment property actually count as your first home, maybe from a financial sense?
Well, the only advantage to first-time home buying financially would be the first-time home buyers plan where you can withdraw your RSPs tax-free. That would not apply. You would need to occupy the property. Okay. And then if you are purchasing the property for rental purposes, you have to put down 20% at a minimum. The lenders might require different. It all varies from person to person, but it's going to be 20% as a minimum if you're not occupying the property or have a family member occupying the property.
And so I never knew that, because I thought that even if you bought a home, you just have to pay a minimum of 5% down regardless. But if you don't actually plan to live there, you actually have to pay the full 20%.
Yes, there's going to be, the lender's taking on more risk, is their position, so then you're going to put in more for them to take on that risk.
Yeah. And in your opinion, should your first home maybe be an investment property if you can actually afford it?
In Calgary, it's kind of difficult to find the property that cash flows positively from day one. I would, if somebody's looking for investment potential, but also considering owning a property themselves so that they don't have to pay rent anymore, I would just encourage them to buy a property that has rental potential as well. Okay. So that could be a carriage suite in the backyard. It could be a basement suite with a side entrance, private, everything's completely separate. That would be the best bet to give them the opportunity to build equity in the property, have the investment income coming in as well, but stop wasting money renting.
And is there an opportunity, so let's say you set up your the first home, your purchase, regardless if it's a first home or not, as an investment property. Midway through, can you go and say, hey, you know what, it's no longer an investment property, I want to move in there? Is there financial implications or any kind of implications on that?
You can do that, of course. Yeah. It's just that if there's an increase or decrease in value, then you would want to get it appraised for tax purposes. Okay. So basically, if it's not your principal residence, then you're going to be taxed on capital gains. So if you buy the property for $200, you sell it for $300, then you have a $100,000 gain. You'd be taxed on 50% of that. So if you're going to move into the property, you have to get it appraised at that time and then essentially pretend like you've sold it and pay taxes on the gain. You can't turn an investment property that's been an investment for 10 years into a principal residence for a year to avoid taxes.
Oh. And does your appraisal then, not that I was thinking of doing that, but does your appraisal impact if you live there or not?
The appraisal would be done when you decide to occupy the property.
Oh, okay.
So if you just, you buy it and you never move in, it's continuously an investment property, you have to disclose on your taxes every year whether or not you've sold property. So when that year comes that you do sell the investment property, you'd pay capital gains at that time from the difference in the purchase to the sale price.
So is it, would it be then better to, I guess, buy an investment property before you buy your first home?
I don't see the advantage of doing it unless you're living for free otherwise.
Yeah.
It'd be better to purchase a property that you have investment potential in, rental potential in, using it as your own principal residence and then as an investment property as well, rather than just paying rent and then renting that out. In Calgary, it's difficult to positive cash flow a property right after purchasing it. That's assuming that you're not putting down more than 20%. If you put down the minimum, it's hard to make a profit every month and not pay out of your pocket, and then you'd be paying out of your pocket in addition to paying your rent.
Yeah. But
it's better to purchase a property than rent. On the whole in Calgary, if we consider the detached market specifically, and then we go over the last 5 years when it was your purchase at the peak, let's say you bought a home at $550, which I have a client right now that's in this boat, bought at $550, probably sell it around $490. So it's a $60,000 loss, but they lived in the home for approximately 60 months. Yeah. So to rent a comparable home would be about $2,500 a month. So then you pay utilities and whatnot on top of that. Let's take that out of the mix and go with the $2,500 rent.
Times it by 60.
Times it by 60, 150,000.
Yeah.
And then if we say that your mortgage on a $500,000 property on a $500,000 mortgage, let's just say that it's about $500 for every 100,000 borrowed. So you're about the $2,500 mark anyway.
Yeah.
Half of that will go to principal every month. So you're still at about a $75,000 paid in principal, $75,000 loss in interest.
Yes.
And then you've lost since the peak of the 2014 market till now, you've lost $60,000. You're still 15 ahead. You've lived in your own home the entire time. You've had control over what happened. And there was also strong potential that the value could have increased or not gone down as much.
And you got to also remember that the assumption is the rent will continue at that price, right?
Yeah.
Right. And I've never seen rent for 10 years stay at that price.
And it depends on your landlord as well.
Yeah,
They might not call you back. They might not fix things as you need to.
Yeah.
And if you wanted things changed, you wanted a larger deck, you wanted a nicer bathroom, any improvements that you made to the property would stay with it, and you would get no return on them.
And remember, if you want to know more about the advantages of owning a home versus renting, check out our video above and the description below. So the question of the day I have for you is, did you buy a property as an investment, and how did that work out? Let us know in the comments section below. And if you want to know more about buying a house as your first investment property, check out this video, as well as other home buying videos here. And don't forget to subscribe and hit the notification bell so you keep learning from the experts. Thanks for watching, and we'll catch you in the next video.